Okay, so we're going to talk about refundable credits. And as I said, and Norb was quick to point out, they're the Energizer Bunny ones, okay? We're going to talk about the Earned Income Credit, the Additional Child Tax Credit, American Opportunity Credit, which is the education, the college credit, the excess Social Security. Like I said, there's a couple on here, the credit for tax on undistributed capital gains and the health coverage tax credit, okay? This is not the health credit that has to do with the Affordable Care Act. This is a different one, and we'll explain that, okay? We're going to talk a little bit about the premium tax credit. We'll cover more when I do healthcare in Chapter 16. And right now, like I said, I didn't want everybody getting bogged down and caught up on the whole ACA worksheet. Just remember on your problems right now, they don't go to the marketplace. They have it all 12 months. Just do it that way for now. Okay, don't get caught up in that worksheet. So just those no, and then the first box, okay? Because that sheet, it takes a while to grasp, and we'll do it as a standalone, all right? So we're going to have all those about that. So the first one we're going to talk about on page 5.4 is the Earned Income Credit, okay? And it is a earned income, all right? It's not just because you have income, it's earned income. What I mean by that is that the Earned Income Credit, as it says there, is a refundable credit for certain people who work and have less than $53,505 of earned income, filing status, married, filing joint. The way the Earned Income Credit works, it starts at 0, and if you have low income, it starts to climb up. There's a plateau, and then it falls off sharply, okay? In the Quick Finder in the front, there is a table for the Earned Income Credit, and if I make $9,000, and I am single or head of household, and I have, we'll do married filing joint, and I have no kids at $9,000 of income, all right? I have $506 of earned income credit, refundable credit, okay? At $9,000 married filing joint, as soon as I put a kiddo on there, a qualifying child, and we know what those are, my earned income credit jumps to $3,069. So what's the earned income credit really driven towards? Homes with children, okay? We'll talk about due diligence in there and how important it is for us as preparers, but it starts out there, okay? Now, if I go up to starting at $14,000, all right? At $14,000, I've reached the plateau. So if I'm married filing joint with one child, and my income is between $14,000 and let's see, roughly about $23,000. Okay, whoops, I'm sorry. With one child, I am one child. $23,850 is where the maximum range is. It stays the same number, okay? And what I mean by that, that's kind of the sweet spot, if you will. Because whether you're making $14,000 or roughly about $20,000, you're going to get the same amount of earned income credit, okay? So there's a range, and then after that falls off pretty quickly. Okay, so that's with married filing joint with one child. That's the range that is in there. Like I said, it's kind of the sweet spot where you maximize the credit. All right. The earned income credit, again, is really driven by the qualifying child. That's where you see the most credit. So obviously what we see a lot of times, and the red flag and things like that, where you have to really look, people come in, $18,000, 3 children, kind of sweet spot. You kind of maximize it. for the child tax and the refundable credits like that, okay? If they earn more than that. As an editorial note, that is where I believe Seattle, Washington's experiencing it already, and New York State will soon with the minimum wage going up. They've already talked about in Seattle that people know how their tax return works. And at $15 an hour, so no, I don't need to work that many hours because then I don't get my da-da-da-da-da. Which, you know, that's not the intent of the $15 an hour, nor is it the intent of the earned income credit. It's kind of that stepping stone to help somebody get out of where they're at in advance. But sometimes it works out, you know, because head of household single mom, you know, working part-time, making $15,000 an hour, she can almost double down on her income with what she gets for a refund. So she'll almost make $30,000 because of the credit, the refundable earned income credit and the child tax credit that she gets. So she could do no tax withholding, have no taxable income, get the refundable credit, and have enough income that she basically makes almost $30,000 a year. But one of it comes in a big shot as a refund. So, which, you know, is fine, but, you know, then your income's kind of fixed. You know, and if you're 24 years old, single mom, 3 kids, you basically just put yourself on fixed income because, and somebody in the morning class, they took a college class and they, that was taxed, but the professor kind of got on a soapbox and he said that they had a homework assignment that, you know, Susie, if she had that job and that earned income credit, would she be beneficial to the house to take her new job at this income? Well, what they're basically saying is she really going to make more money? And there were certain thresholds where you don't, and there's certain that you do. You know, so working more and things like that. So that's just the way the earned income credit works, okay? Again, there's different thresholds. That's a great little, and I love the title of it, Earned Income in a Nutshell, down at the bottom of 5.4. Talks about the rules, qualifying child, and figure that earned income credit, and has those thresholds there because they obviously phase out at a certain point. Okay. Rules to qualify for the EIC. I can't drive it home enough. To qualify, the taxpayer must have earned income. In parentheses, it says be working. All right. We've defined earned and unearned income, so we know those. We talked about the AGI. We just talked about that. You must have a social security number. Filing status cannot be married filing separately. It's one of these things. We're going to start to see more and more of this. And we talked about, when we were just doing a little bit, I touched on it with filing status. Married filing separate really starts to penalize you when you get into the return and the credits, because a lot of them are void. Okay? Must be a U.S. citizen or resident alien. You cannot file Form 2555, which is foreign earned income. Investment income must be $3,400 or less. Okay? So, back to my little family of $18,000 of income, single mom of 3. She owns and lives in a double and rents out the other half. Her profits from the rental of that other half of her double is $5,000. Can she get the earned income credit? No. She now has investment income because that rental property is considered investment. So she just basically voided herself out. All right? So that just is one of those things that, you know, investment income. I have a client, and we go round and round every year, because it never works out for me. He's been working for a landscaper, same person for the last 5 years, exactly the same income for the last 5 years on his W-2. Okay? He's married, 2 kids, exact the same, has his unemployment. And the part that doesn't add to me is when I get his mortgage interest and his property tax. Because there's no way in God's green earth what he's paying in property tax and mortgage interest, unless he's paying 45% mortgage interest, that what's on his W-2 and unemployment, he can afford the house. Well, you know, a lot you can say. because you have to go by what they give you and being truthful. But I would think at some point the IRS is going to go, wait a second, this doesn't add up. So, but, you just have to make sure that you do your due diligence for the earned income. We're going to talk about that in a little bit. And they must have earned income. The qualifying child must meet the relationship, age, and residency test. We've been kind of checking off some boxes on that 8867 and earned income credit. We're going to talk a little bit more about them. Qualifying child cannot be used by more than one taxpayer. So that doesn't mean that if you have the joint custody, that you get to split the EIC 50-50. Remember I talked about tiebreakers. This is where it comes into play, because who's going to get the earned income credit? My perspective is that I always try to make sure it goes to the house that the child lives in, because that's really what this credit's for. You would hope that it is used for them to be able to be the first generation to maybe, whatever. If that household's been in that type of income, have the kids for their opportunities. Okay? So that's kind of the perspective I've had there. All right? And the taxpayer cannot be a qualifying child of another person. Okay? All right? So, if my college student's making $9,000 and would qualify for the EIC, but they're dependent on my return, can they get the EIC? No. Okay? No. All right? Rules if taxpayer does not have a qualifying child. This is basically the single person. This is where I've had to break the news to some people. Grandma and grandpa turn 65 with the grandkid, and maybe their income has qualified them because they're working that little extra job for the EIC. And all of a sudden they turn 65 and it goes away. And they go, well, that doesn't make any sense. I still got the grandkid. Okay? Well, that's just the way it works. All right? Okay.
That's only if they don't have a child.
What's that?
That's only if they don't have a child? That's the rule for if you don't have a qualifying child.
If it does not have a qualifying child, yes. Okay.
If they have a qualifying child and they're over 65, they still can get it?
Sometimes it works out, yes, but what do they typically have if they're in retirement age? Probably have some, or the earned income. Or what's the other thing sometimes comes into play? Investments. Market's doing well right now. I guarantee a lot of people are going to lose it that are that age because they're going to have dividends in excess of that 3,400 because the market's so good. Sat with a guy day before yesterday. He's in a panic because he looked at his capital gains and his dividends year to date on his brokerage statement. It doubled what he had in 16. And it's going to put some of it income into his 28%. So he's going to get killed on taxes on it. So just because the market's doing so well. All right. Okay. We have on page 5-6, we have a little example with John and Janet Smith, married couple, one child, on a Form 1040A. They have a young lady named Amy who lives with them. All right. We have their earned income for John of $9,500. Janet has $1,500. So they got $11,000. And it shows over on page 5-7 what we would do to put Amy on there as a qualifying child. Okay. Obviously the form, the Schedule EIC, you start to look at the name, Social Security number, that was one of our stipulations, the age, so it asks for year of birth. Okay. When we do a problem, we'll talk more about this question about was the child under age 24 at the end of 2016 a student and younger than you. Okay? All right. So, if I have a qualifying child on my return that's older than me, what instance would that be? So, if you're 30 years old, you're going to adopt a 31-year-old? Or, well, excuse me, if you're 23 or 24, you're going to adopt a 25-year-old? I don't know why they say that. I've thought about it a lot. I'm trying to think of a scenario. So we're saying that and younger than you or your spouse if filing jointly.
Sibling.
So the qualifying, it's tough. So, but obviously it's put in there for a reason, okay? And then choice B, it says, was the child permanently and totally disabled? Okay, so those are the questions. 5, it talks about the child's relationship and then the number of months where they live with you. So you have to qualify for that. You know, that's 7 months. So again, they have to live with you more than half the year. No, we 50-50, right down the middle. Okay, I'm going for the higher AGI. What did I tell you is going to happen to the earned income credit from that? They lose it. Okay, so we have all that. All right. Further with their problem, if you go over to 5.8, it shows the calculation there. So do you enter the income? All right, you look up the amount in the table, which, you know, the table, you can look it up, it computes for you, or you can do it in the quick finder. All right. And then it tells you if you have any of the things that would disallow it, and then it tells you your earned income credit. Okay. So this family has $3,373 coming. All right. The next problem we have Kelly, who is age 30 and a full-time student. She lived with her parents in the United States for all 2016, had a part-time job, interest income. She's not eligible to be claimed as a dependent on her parents' return. So what's that tell you right away? Does she meet the criteria? Yeah. You know, that's why that was said in there. So you need on the bottom of the EI worksheet for Kelly that she does qualify for a small earned income credit. All right. So we have that. Okay. EIC has eligibility checklist. Okay. They have to be able to answer all of these. The big thing on 511 is the ethics of the refundable credits. You have to do your due diligence on this one. Okay? Yes? For a single person?
Yeah, why is it different? Here, 5,259. Line 5 says less than 2,250.
From the worksheet, which table are you referring to down there?
I mean, this number, 59 here, this number compare this number here, this is 14,000, so why is it sure different? 5 more page.
That's a good question. Oh, for the additional on there where the threshold starts, because that is. $82,506. Yeah, because that's the top end threshold, is why they use that number. So so it doesn't disallow some of it. It's not, they're not the same numbers. That's the maximum. So that 8205 is where you would maximize the earned income credit. Yes. Yep. So basically what that's saying is that the number that you got on line 2 is correct with the calculation. Okay? Because when you answer yes, it says enter line 5 blank, enter the amount from line 2 on line 6. Basically, that's a number that maximizes the earned income credit as a single person, so you're not calculating twice because you already looked it up above. Okay? Because if you look in the tables at that number, that's the top end of when it maxes out for a single person. All right? Okay. All right. Back to the ethics. The 511, page 511. Your due diligence has to be done. Okay. As you can see in there, $500 penalty against you and your employer. So if you think about Esther and all her offices and all of her employees, you know, if these aren't done correctly, we have to make sure that we do them. Okay. If the preparer is a client's return, any part of an underestimate of tax liabilities due to an unreasonable position, we can get assessed a penalty of $1,000 against you. All right. Or if you're reckless or intentional disregard of the rules or regulations, it starts at $5,000. So basically it's saying is that if you're reckless and don't follow the due diligence forms and try to make sure that they qualify for their earned income credit, it could be a penalty. And it's going to be on you and Esther. Okay? And trust me, Esther does not like to pay penalties. All right? Okay? So you have to make sure. Plus, we might have to pull the money here in the class to bail you out because you'd be subject to criminal prosecution. So not only would you be paying, but we'd have to come bail you out. Okay? Basically what I'm saying, and we'll get into this more when we start to look at the 8867 with the pay preparer's due diligence, you need to do your homework. All right? When I sit down with a client, we have to maintain records as it talks about, and one of those things is we have scanners in every office now once they start doing the due diligence on this. I get Social Security cards. I get birth certificates, and then later we'll talk about all the different forms to prove the residency. You know, a school record. It's tough now because all the schools have gone to these portals and they're paperless, so they don't mail home report cards. So when you print it out, it doesn't have mom and dad's name on it, nor does it have an address. So you got to find something from the school. One of the best is, and it's just because of the earned income credit, is the letters from social services. Because those forms where they apply for Medicaid or SNAP or supplemental income, that all has that on there. Because trust me, to get what they can maximize there, they're going to have all the kids listed that live with them. So that will have their social security number, their name, the parent's name, and the address. And sometimes you get one of those, and then you're looking at the return and going, you don't match up. Where's this person? Oh, I let my sister claim that one. Okay. You know, I hope I'm not doing your sister's return because that's fraud. Okay. You know, you can't pass the kids out like they're candy at Halloween. Say, here's somebody to claim on your tax return. Okay. So if anybody's doing that at their house, please let me know. So, but what I'm saying is you have to do due diligence on all of it. All right. Complete the sheet, read it. I know when you first get it, it used to be, you put it on there and it was like one page, the IC worksheet that we went through. Now they got this 8867, you know, 2 or 3 pages. And by the time you're done, you think you're asking for their fingerprints and you're interrogating them. You have to ask. And when I talked to somebody about it, and I said, you know, I apologize. I need to go through this. It's part of my requirements as a tax preparer to do your return, and it's a requirement of my credentials. You know, you kind of have to put a little bit back on them and say, I have to do this. All right. I don't think you can use the analogy, but you know, when a policeman pulls you over, you're not going to ask him, oh, you know, you don't have to give me a ticket. You know, well, you can't ask him right out of the gate. You don't have to ask me about this. Just let me claim the kid. Just let me drive 65 on a 35. It's no big deal. Nobody's going to know. Well, you know, the ethics says that you have to know. And I'm sure that police officer would get in trouble too. Okay. The due diligence form has 3 columns now. We'll talk about all these. The EIC, we've talked about earned income, has the CTC, which is the child tax credit, the ACTC, which is the additional child tax credit, and the AOTC, okay, which is American Opportunity. All refundable credits, all areas where the IRS sees the fraud the most. All areas where New York State and the IRS send us letters all summer long to prove. People come in, IRS says I need to prove this. New York State says I need to prove this. With New York State, it's just because they don't want to give them the refund, but that's a whole nother subject. But most of the time we have to prove it, due diligence, okay? So those have to be proved. And that's, like I said, where we scan things in there. Does somebody have to bring in school records and stuff? No, most people have gotten pretty good about it, because the first year when we required this and we would not file the return, because you look at on page 513, number 5, did you satisfy the record of retention requirement? Well, if you're checking off yes, okay, used to be you could just write down there previous client. Now the IRS doesn't like that, okay? So, you know, when it's a new client or something like that, type in there, school records, note from the doctor, social services statement, put something in there, because then it shows that you did your due diligence and you scanned it and you saw it, okay? All right. Page 2, the due diligence, and we'll talk a little bit about this later. You know, did they provide all the forms they needed to? And then at the bottom, it says credit eligibility certification. Did you certify that all the answers on this form, 8867, are to the best of your knowledge, true, correct, and complete? Not only did you ask them once if it is accurate and what it is, now you have to say, as a body of work together, is this all correct and complete? So redundancy, right? On 515, you see all the different things to verify residency. You know, another good one is the landlord. Chances are, if they're in a rent-controlled environment, you know, because of income or whatever, they're going to put as many names as they can on the lease so that they get lower rent. Again, if they don't line up, you ask them, where's Jane? Oh, Jane's on somebody else's return. She lives with me, but I just let somebody else use her. Okay? Because for the earned income credit, after 3 kids, it doesn't matter. You're not going to get any more. 3 maxes out the number of kids. All right? And again, don't think that everybody that comes in for the earned income credit is this way. It's just, I told the story this morning. I had a client, kind of saw the marriage and the children and stuff. I felt bad for the kids, but they would come in and file the return, and they were separated, but they would come in together with the kids to file the return. The one year, mom came in, arm in a sling and a black eye. So I knew something was awry to start with. The father would give his bank account information for the mother's return for the refund to be deposited. Her income was right in the wheelhouse, 2 kids, earned income credit. Every year I require them to bring in something that shows me the residency. And the one time they brought in a psychologist report from the school, because on the top of it, it had the kids' names and dad's name or mom's name and address. In the body of it, it says that the kids live with dad. So I said, I can't use this. And they got upset. And I said, it says right here they live with you, even though the outside on the address. So make sure you do your due diligence, because they were obviously trying to get the most earned income credit, and dad was taking the money for himself in his fund. So you have to be very, very careful with that stuff and just make sure that you validate it. All right. Let's see here. 8862 on page 517. All right. There's some good examples there that go through the different scenarios for the earned income credit. If somebody is disallowed the earned income credit, this is a file to say I'd like to get it back. Most people that are disallowed for it don't even try. I think the rules, if I remember correctly, are 10 years and a $10,000 fine for fraud on an earned income credit. If you think about it for a child, they're getting ready to start school, 10 years, you basically have lost the earned income credit for them in your household till they're graduating from school as a senior. 10 years. So that's a pretty stiff penalty. Okay? So make sure that, you know, you can try to recertify them for that disallowance. Okay? All right. A couple good exercises there. Like I said, I'll send out the answers to the exercises for you so you can check your work on those in 5. All right. 526, the additional child tax credit. Okay. Does that smell like hydrogen in here? What's that? Anybody smell that? Smell like sulfur? Yeah. Isn't there still hydrogen trapped in here? Additional child tax credit. The additional child tax credit is a refundable credit that may be available to taxpayers with a qualifying child who are unable to claim the full amount of the non-refundable child tax credit. Okay? We're going to see the other part. So there's $1,000 per child. And that's all it costs you to raise each kid for a year. That's why they give it to you. Anybody do it on 1,000? Okay? That's just about school supplies, isn't it? So what they're saying, there's a $1,000 pie. We can cut it up. We can use it all against our tax bill, $1,000. Or if, say that we only have a $250 tax bill, well, we're not going to let the $1,000 go to waste. We're going to use the rest of it as a refundable. So I'll get $750. So you're going to get that $1,000 for that qualifying child one way or the other. You can use it up top to eat up your tax bill. If you don't need it there, they're still going to give it to you. It's not a lost credit for the kids. So it's just, it works hand in hand with the earned income credit to maximize that. Okay? There's a form there, the child, Schedule 8812, the child tax credit. Same thing, has to be due diligence. You must make sure that you have correct information so that you know that they're eligible for it. But basically, you just have to know that it has 2 components. Okay?
What's the I-10 for? ITF and individual taxpayer identification number. Is that the top of it?
If somebody's not a citizen or a foster child or something like that, you can apply for ITIN. It's a temporary Social Security number, individual tax ID number. I see it a lot with foster kids or kids that are being adopted and the dad won't relinquish. I have one client we had to do ITINs for because dad was in jail and he was the only surviving parent. Mom had passed. And he didn't want to release the Social Security number, but these people had the child on their return as a foster child in order to claim something or adopt them. But, you know, dad's had it set up that he wouldn't release the Social Security number, so we had to do an ITIN for him until we could get a Social Security number issued during the adoption. Sometimes they end up with a new one. Okay? All right. We have a little teeny paragraph on 5-28 about the American Opportunity Credit. Obviously, from reading chapter 6, you realize there's more to it than just that little teeny paragraph, okay? Credit for excess Social Security, we've talked about that. Again, I talked a little bit. You can see down there about the railroad one when it talks about the type of tax, the railroad RTA Tier 2. That's why I wanted to show you too that W-2 because it has Tier 2 on there. So if they have more Tier 2 than $4,321, that's excess that they would have to get back from the railroad, okay? And remember the one employer, two employer rules. All right. On page 531, credit for tax on undistributed capital gains. I can remember last year when Esther was going through the book with us to kind of get stuff ready, she goes, why is this in here? It just doesn't happen, okay? But it's one that's on the credits there, all right? 533, the health coverage tax credit. This is not the Affordable Care Act. This is not the premium tax credit that you hear him talking about in repeal and replace. This is something totally different, okay? What this is it is a tax credit. When we see it most of the time is for somebody from the auto bailouts through Delphi. They could go back and get a credit to help pay for their out-of-pocket premiums if they were a retiree or no longer working. The other one is, I saw them a lot in Lockport when some of the things surrounding Delphi closed down because the displaced worker. If you were a worker that was displaced and your job was shipped overseas, you were eligible for this credit while you were retraining to get a new job. So if I was a special machinist and I did a special job and now my job is in China and that's all I could do and I'm being retrained to find a new job, while I'm being retrained and paying for my insurance premiums, I'm eligible for this credit. So that's what this one is, okay? So again, it's kind of a bridge thing for somebody. It sounds just like the Affordable Care Act, but it was something that was in place before that, all right? On page 535, you can see the form, the 8885. The biggest thing I want you to note is it talks about all the elections to take it, but the months, because a lot of the clients, while they were being retrained and their job had been displaced overseas, they only had certain months they could take it. It wasn't a blanket credit for the whole year. You can only take it in the months that you qualify for it. Most of them get a little statement that comes along with that that shows their HCTC, okay? I think it's on 1099. Can't remember, you don't see a lot of them. But it shows up and you only can calculate on the months that they had this credit eligible. All right. That is chapter 5 in a nutshell. All right. Basically what I want you to take out of it, refundable credits, Pac-Man credits, go on and on. The big ones you have to know, earned income credit, due diligence. Do everything you can to make sure you identify that that is a qualifying child and everything it is that meets that qualifying child test. Remember I said how important it was to do that main info sheet? You can get a leg up when you're filling out that main info sheet with somebody. Because you can say, okay, this is your child. It is your biological child. You know, they kind of snicker, yeah, I was there when they were born at 14 hours or whatever, okay? 38 hours or 10 days, whatever it took to give birth. Your proven residency, okay? 12 months, they lived with me. Is my child. All those things that are on there. Social security number, okay? So you proved everything. Now, that gives you a leg up because then you can say, well, I have to do my due diligence. Now I need a document that validates. All right? So that's the big thing from there. Okay?
I have a question. What if it's an error that, say, I made as a tax preparer? Can they still lose the earned income credit for 2 years?
No.
Or 10 years if it's an error
No.
that I made?
You know, if it's an error for you and it's calculation or something like that, you can amend and get it.
Oh, okay. Or a number I typed wrong.
Yeah. You know, a lot of times, you know, you have to send supporting documentation and things like that. But, you know, that's different than actual flat out ethics or negligence.
Okay.
You know, if it's just an error, that's different. You know, and again, a calculation, if it's something you can always amend. But, you know, if it's something that, you know, you're allowing your cousin Susie to claim her sister's 5 kids and they don't even live with her and they're not even in the same state, that's a problem.
Yeah.
So, and I think we busted somebody downtown because one of the offices down there was getting these returns because the office had closed, and I can see why. Every single one of the returns was fraud. It was just a factory for the earned income credit. And that's why the IRS, they're down 37% on their negligence or their fraud there with all the things that they're doing. Which when you're focusing that much and you're able to drop that much, how many billions of dollars are you talking about in fraud? So you would hope that a little bit it has to do with the economy and people getting better jobs too. All right, so let's take 5 minutes and then we'll come back. We'll do non-refundable part 1 in chapter 6. And then after that, we'll spend some time on some problems, okay? So now we're back to the book. We're in chapter 6, non-refundable credits part 1. So obviously, it's a good thing we didn't do this all as one chapter because chapter 7 is about as long as chapter 6, okay? Starting out with the non-refundable credits, he does a little thing which I think is great. It's sometimes it's hard to follow and read, but when we get into a tax deduction versus a tax credit, okay, what it boils down to is one is a percentage reduction, the other one is dollar for dollar, okay? If I'm taking a deduction, that is a dollar for dollar lowering of my income, okay? So I have it on there, all right? So it says a tax deduction reduces the taxpayer's taxable income because I'm taking it off before I calculate the tax. And tax is a percentage, okay? All right, so we have that versus, you know, the credit, which is doing what? Eating up the tax bill, okay? So if I have a greater deduction, chances are it's not going to result in a lower tax bill, dollar for dollar. People always have this thing that, what do you mean? I gave $8,000 to the church on my itemized deductions. That means I should lower my income and my tax bill by $8,000. Where did my $8,000 go? I'm sorry, but your $8,000 is not taken off your taxes. It's taken off your income. So it filters down as kind of a percentage, okay? Whereas the credit does what? If I get $1,000 for the kid, I get $1,000 off my tax bill, dollar for dollar, okay? That's really what this is talking about. Now, I love the term here that he has effective tax rate, all right? Came up a little bit in the last presidential election, but do you remember when they were running against Romney? They used that. Most people had no idea what effective tax rate meant. Okay? It's not that big a deal. You know, he's in the 28% tax bracket, but they're saying effectively he's only paying 18%. Well, so are a lot of other people. Just because their income is taxed at 25% because of the way that the deductions and stuff works, you're really not paying 25%, but, you know, effectively it's lower. Okay, and you know a lot of people didn't understand that how that adjustment was because they thought, oh, he's cheating. He's supposed to be paying 25 and he's only paying 18. He must be a crooked president. No, it just it was just where you don't understand the effective rate on that. Okay, so that's the big thing with this. But like I said, it's very good because a lot of people will come to you and say that their deduction should be $1 for dollar. Where is it taking care of my tax bill? And the one that we see the most often is charitable. Well, I cleaned out mom's house and I gave, $8,000 worth of her clothes and everything else before I sold it. Where's that deduction? Well, you don't get it. Either if they don't itemize or it's only reducing your taxable income before you calculate your tax. It's not coming right off your bill. Well, then why did I do it? Well, I think you did it because you needed to get rid of the things that were in the house and stuff. So, okay. The next page on 6.6 and 6.7 talks about non-refundable versus refundable, okay? Kind of, again, shows that the non-refundable is the tax credit that eats up the tax due, thus the Pac-Man. So I was trying to explain Pong to my kids the other day. They thought that was silly. And I said, yeah, it was even more fun when you went to watch TV and it was burned in there. Because there's a little bar and then there's a little place where you slid and the little numbers up there burned into your TV. So I said, hey, it was a video game. Neatest thing in the world. But non-refundable, Pac-Man eating up that credit. Okay, refundable, Energizer Bunny keeps going on and on and on and on. Okay, so you can see the difference on the impact that it would have with all the things that they talk about in the tables and the charts there. All right. We're going to discuss the foreign tax credit, the dependent care credit, the American Opportunity, and the lifetime learning credit in this chapter. Okay. Foreign tax credit. Referring back to the little thing I did on the handout from Fidelity there that I gave to you. If you take a look on the little handout, you're going to see that most often on these. When you look at the dividend one, there's one up there that box 6 or line 6 or whatever under the dividend says foreign tax paid. And the 1099 interest, foreign tax paid. Okay? Kind of see where those are on that first page there on the front page. I think I discussed, but you know, if you have a mutual fund that has overseas holdings, and the one I see most often is Lord Abbott, whoever Lord Abbott is. He has a very nice mutual fund. A lot of people are invested in it. You always got foreign tax. When you go farther into these, you can tell this one was 10 pages long and I didn't give it all to you. There'll be a page in there that'll list the countries that they might have paid tax to. So basically their investments had something in there where that entity paid a tax to another foreign government on their behalf, so you get a credit for it. Might be little, but you get a credit. Okay? So that's what that is. There's another part to that 1116 about the foreign tax credit. There's another 3 pages actually. What those 3 pages are is if somebody actually filed a tax return in another country or had earned income where they had a tax. So where we see that sometimes is with Canada. If somebody has Canadian earned income, and then we do a foreign tax credit because they had a tax bill that they paid there. But on the form, there's one little box up at the top. You just put it right in there. Or you don't even necessarily, you can just put it right on the form. Okay? Because excuse me, right on the 1040. All right. Okay. Child independent care credit. This is another one. It is a non-refundable credit. And how many in here have ever had to pay dependent care? How many see these statements for what you're paying for child care and you're going, I am in the wrong line of work because that's just my kid I'm paying for and there's 50 kids in that building. Okay? It's a pretty good racket. You know, they make some money. You know, and again, this is one of the ones where they're going, I paid $9,000 for Susie and Billy to go to this Doodlebugs, which those things are everywhere now. Somebody's making a killing with those because those buildings are everywhere. I paid $10,000 to have them watch, $400 a week or whatever, so I could work. And what do you mean I only get $600 credit? It's just the way the formula works. We'll talk about when you do the 2441 form that the maxes out that credit and the maximum amount that you can get in there. You know, it just, you know, they think that, again, that they should get $1 for $1 off their taxes for all the money they paid to have their kids watched. It doesn't work that way. It's not effective that way, I guess would be a good term for it. Okay? And notice that it says dependent care. I don't know whether you've seen them popping up, but there's adult daycare centers. I don't think they call them doodlebugs. It would be an old person's doodlebugs. But they're popping up. You know, because if mom's living with you, you don't have anybody else, and you can't afford a VNA, she's got dementia, you might have some place where she goes during the day. All right?
There's one in Commerce Drive.
Yeah, you're starting to see more and more, you know, because it's an alternative, you know, because what was the alternative before that? Where did they end up if they couldn't live with you? They end up in a nursing home, and that's not cheap. So, you know, I guess that would be the alternative. So to have somebody in, you know, depending how their Medicare works and what it pays for, you know, you might not be able to have somebody come in as a VNA. So that is an alternative, okay? The other thing is, you get, well, grandpa and grandma watching, and we give them $400 a month. Okay, great. Would you like to claim that? Well, yeah. Okay. Did you give a 1099 to grandpa and grandma? Because they have to claim it as income now. Oh, no. We just gave money for groceries, okay? Because what's going to happen to grandma and grandpa? All of a sudden, their Social Security is going to become taxable because they got all this self-employment. So it doesn't work out. You know, oh, no, I pay my sister. I pay her, $100 a week. Okay, great. What's your sister's Social Security number? I'll make sure that it's on here because it has to be on the form, or the EIN number if she's a registered daycare center. She has to claim it as income. Oh, no, just forget it. Okay. The other thing, too, is it talks about in here, the earned income and the qualifying of the work test, talks about reimbursement. We do see on the W-2 in that box 10 with the dependent care, like I said, with Geico, you see a lot of times Geico has dependent care credit. The other thing is, depending on their income, if they're earned income eligible, they may be getting supplemental assistance from the state or the county to pay their child care. So is it really their money to claim the credit? Is it they're qualified? We're going to keep hearing this term when we talk about credits, qualified. Is it their qualified expenses if somebody else paid it? No, because they've been reimbursed. So again, a little bit of due diligence goes a long ways on this. It's not a very big credit. It's not like the earned income credit. It's not a dollar for dollar off their tax bill, but you have to be careful. Now, on the flip side, the state, a little interjection about New York, it is refundable on the state side. So it doesn't matter whether you ate up all your tax bill on the state side, you're still going to get. And a lot of times what happens is the credit on the state side for the dependent care credit is greater than the federal. It's one of the few that works out that way. Yeah, it's refundable. Okay. All right. And the other thing is we're going to start, and we'll hear a lot about it in different spots. There's phase outs. Okay. What I mean by that, there's ranges where you get to a certain threshold, and I always tell everybody, I want you to picture Back to the Future and Michael J. Fox. He's standing there holding the picture of his siblings, and as the movie goes on and the credit gets bigger and bigger, what happens to the kids in the picture? They start to fade away, okay? That's what I'm talking about with phase out. It's the child tax credit and the child dependent care. You get certain income. While that range, they're fading away, and you get to the end, they're gone. So for parents that maybe earn more than $110,000 as far as their taxable, okay, they're in a phase out, and that means that their kids are no longer $1,000. Okay, all right. That's where I usually look at the couples and go, if you adopted, you could get more money. So, don't worry about your own kids. Adopt somebody else's, because then you get more for them. So, all right, because their kids are not worth anything anymore. Talks about there the care of the qualifying person must be for their care. Preschool qualifies as for their care, and so does before and after school for kindergarten and above. What's the big one that you see that all the schools have tied to them, and even the bus home from? The Y. They have Y programs, for the kids that school's out at 3, mom and dad work till 6, and the kids stay there and then are bused home. That is qualified. Okay. Summer school and tutoring programs do not qualify. All right. So I had somebody this morning ask, well, what about if they're in an after-school sports program? I said, well, it says up here must be for their care, not their entertainment. Okay? So putting them in soccer after school so that you can work, kind of for their entertainment. But if it's part of the other program, okay? And then down at the bottom, we talk about the dollar limit. 3,000 is where the number starts for one qualifying person, or 6,000 for 2 or more. That's where our credit is calculated off. We'll see that when we see the form in action, but that's where that credit is calculated. Okay? We claim the credit on 2441. Expenses paid, only expenses paid in 2016 qualify for this credit. However, prepay services can only be counted in the year they are received. Expenses paid in 2015 for 16 cannot, or excuse me, can be claimed in 2016. Okay? Sometimes we see this credit, sometimes it will carry over on the back of the 2441 if there's excess, that some of it will carry over the credit. Okay? All right. I was talking about the form. If you go to page 617, you can kind of see the form in action. All right? Okay. So we have here Little Red Riding Hood. This is for, who's our example here? George Smith has one child, Susie. He has $24,000 of income. He pays work-related expenses of $2,900 for the care of his 4-year-old child. All right. So we look on over there, and his employer pays an additional $1,000. So what is actually given to Little Red Riding Hood? $3,900. So that's where you see that entered. But his qualifying expenses, you know, again, you're going to hear this term a lot, qualifying. You're going to have qualified tuition, qualified medical, qualified retirement. Okay. Qualified, all it means is that there's probably a test by the IRS that has multiple things that you have to prove. Qualified expenses were $2,900. Okay. All right. So everybody see how that was different there? Because on the back side of the page there, part 3 of the 2441, we see the $1,000 come in because it is what? Excluded, because it was reimbursed. All right.
I hate to ask a stupid question. If it's paid by the employer directly to Red Riding Hood, is that income to the person? Does it show up on W-2?
Probably will in that box 10, that dependent care. Yeah. Yep. Kind of one of those things with both sides of the equation. If it's not taxable on your W-2, are you going to get a credit for it on your tax return? No. 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 Okay. It's kind of like the life insurance we talked about the other day. If you can't take the credit for the premium you paid, they're not going to tax the income that you receive. You know, so if you look at either way, you know, it's can't have a cake and eat it too, I guess, or double dip or whatever you want to call it. Okay. So you can see there it says we add the amounts in column C. All right. Okay. Of line 2. Do not enter more than 3,000 for one qualifying person or 6,000 for 2 or more persons. Okay. So you can see the calculation that we do going down through there. All right. Obviously the form is going to do it for you. The big thing I want to point out is line number 8 there, where it has the income ranges. You know, that decimal amount stops at 20% once I get to 43,000. So you can see the higher income, that just the credit and, you know, the more you pay for the kids and things like that, it just doesn't work out. Okay. All right. Okay. Now, how many of you guys were on page 620? How many of you guys have a au pair or a nanny at home taking care of the kids? No? Nobody has one of those? No?
I married her
Oh, yeah. Does she know this?
45 years ago.
Does she know this? Have you told her this? Okay. You realize this is recording, right? Huh?
She's not good with computers.
Okay, all right. So I have this a recording of this, Robert, okay? All right. So employment taxes for household employees, again, don't see a lot of those, okay? Again, one of the offices I was at, there is a, what is it, Nanny International out of Colorado. Does a lot of Chinese au pairs and nannies that they have, that they bring in. And they know exactly how much that the family should pay so that it doesn't make a tax burden for either one. They got the formula figured out. So, all right. Okay, so you got a little problem there to do with, like I said, I'll mail those out. Exercise 6B, hand doing the forms. I want you to do those forms because I want you to understand. Because if somebody asks you, how come I didn't get $9,000 off my taxes for my child care? Well, because this is the way the formula works. It only takes a portion. You only get 20% because of your income. You're going to, you have to understand basically to explain to them how the formula works. How the worksheet works. It's a popular worksheet because it seems like you answer the same question 3 times, enter the number. It's just the way the IRS is. So, all right. Okay. Found out from Chris the other day that my number was off. It's not 700, it's 73,000 pages for the 1040, plus 800 forms. That's the tax code. So if you notice, we're not going to touch on all 800. Okay, we'll get the important ones for you. All right. All right, education tax credits. Another biggie. It's on the due diligence sheet. We basically have 2. Okay. One is under the Energizer Bunny, the American Opportunity. The other one is the lifetime learning. You can see a great chart down there talks about the 2. Biggest thing I want you to remember is that first line, the maximum credit. American Opportunity, refundable portion, is up to $2,500 per eligible student. Okay? So if I have 2 college students, how many times can I take the American Opportunity? Twice. American Opportunity twice. Okay? Lifetime learning, yep, you're one question ahead. Lifetime learning, up to $2,000 credit per return. Okay, I tricked you, sorry, Teresa, okay? I have 2 undergraduate students. They're in their first 4 years of college. How many American Opportunity credits can I take? 2. I have 2 graduate students have completed their 4-year undergraduate bachelor's, okay? How many lifetime learning can I take? 1. 1 per return, okay? What if I have 3 kids in college? Other than the fact I didn't do very good to family planning, okay? If I have 3 undergraduates, yeah, chances are you're going to need the credit, right? If you got 3 kids in college at the same time. Until the morning class, my wife and I thought we were so smart. We had the kids 2 or 3 years apart, planning stuff like that, until we realized at the end of the first phase, we're going, boy, we've been changing diapers for a long time. Now we're at that phase, we're going, boy, we've been paying for college for a long time. So you got to be careful. So I was advice to my kids, say, if you want to have a lot, I put them a little closer together because you got to get out of these phases quicker. So, all right. Okay. But I wouldn't trade my kids for anything in the world. Love them. All right. Talks about income. You can see the thresholds, the phase outs, as we call the limit, they called it there. Lifetime learning, non-refundable. Okay. So it's a Pac-Man. American Opportunity has 2 components. We talked about it earlier in the refundable, but it has a non-refundable portion. All right. American Opportunity, 4 years. Okay. This comes a little bit of a funny calculation because on a tax return, it can look like the kid was in school for 5. All right. Because what happens? That year that they graduate from high school, they go to college in the fall. That's the first year the credit kicks in. What also happens in the fall with their spring of the next year's tuition? A lot of times it's billed before the end of the calendar year for the next, and the payments come in too. So there we have our first year. Then they got their sophomore year, their junior year, their senior year starts in the fall. So we're at 4, but they graduate in a 5th tax year. Well, you don't get the American Opportunity there because what happened with that spring semester of their 5th year? It was rolled into the previous year. So American Opportunity, 4 years, okay? That 5th year, maybe they're in grad school, lifetime learning, all right? What happens, let's see, Norb went to school for 2 years, way back when. When did you graduate from high school, Norb? Okay. So in 1972 and 73, he went to and got a 2-year degree. Now he's decided he wants to go back and go 2 more years of college and get his bachelor's. Is he eligible for the American Opportunity? Does he meet all the criteria? I see Mark going through the little questions now there at the bottom. You're going, and you know, on the form too, we'll talk about them. So does he meet the criteria? Well, let's go through it. Norb, does your house make less than $180,000 a year? Okay. Have you not completed the first 4 years of post-secondary education? Nope, he didn't do that, so he's okay there. Student must be pursuing a program leading to a degree or other recognized education credential. All right. Norb decided to go, what did you always want to be, Norb? Hairdresser? Norb's gone back to school to become a hairdresser. He's going to get his bachelor's, okay? Student must be enrolled at least half-time. Everybody kept asking me this morning, well, how many classes is that? I don't know. I really don't. It depends on the educational institution, okay? Some schools fit 12 hours is full-time, so you must be at least half-time, so that's 6 credit hours. Some schools, to be a full-time student, you got to do 15. You know, so it depends on the school. It just has to be, they have to be at least half-time. So he's met that, okay? Norb, you ever been convicted for the possession or distribution of a controlled substance? All right, so he met that one. He pays his tuition out of his pocket. That one was good. So those other 2 years, can he take the American Opportunity? Sure. Sure. Okay? Because he's met all the criteria. Now, what if he had taken 2 years, but he was in a 3rd year and dropped out? Does he still get it? For 1 year. Yeah. Okay? Because that counts. All right? Because he was enrolled in school. Okay? Lifetime learning, you can see all the different stipulations there. All right? Claiming the credit, it has to be a taxpayer paid qualified education expenses of a higher education. Qualified expenses, as it talks about there, what are they? Tuition? Is it room and board? No. Okay. Is it fees, like insurance that you have to pay at schools? A lot of these other things? No, it's tuition. Okay. Now, the gray area used to be computers. Does everybody say, well, we bought my son or daughter a computer to go to college. They needed it. Well, it used to be that qualified things had to do with your major course of study. All right? So, prime example, if I'm an art student and I buy brushes and paint, sounds like qualified expenses. Okay? If I am a, let's see what would be here. Let's see, if I'm a, we'll use Norm as an example. I'm a hairdresser. I'm going to school. I probably do my shears, but I'm taking an elective course and I got to buy wrenches for it, for auto repair. No. And what was probably the key word there? Elective. If that class was required for me to graduate, which I don't think that a hairdresser and an auto mechanic class are going to be the same major, but you know, what I'm saying is it has to be, the computers were the ones that were always gray, okay? But what has started to happen in this day and age of technology? What do some colleges do? They require you to come in with a computer, all right? Or some schools, it's part of your tuition, and you get there and they hand you a brand new tablet and says, you know, you're enrolled. You know, because look at even down to the grade schools. I think some of the grade schools now, every kid in the school has a tablet, okay? But, you know, so it used to be a gray area, not so much anymore, all right? So those qualified things. What do I need to have to complete my degree of study, my course of study? All right? Now, qualified expenses. So if we go over to 627, talks about qualified education expense. All right. Does not include meals, room and board, athletic fees, insurance, transportation, or other expenses unrelated to the student's academic course of instruction. Again, it's mandatory, okay? I am going to be a gym teacher. Can I write off my footballs and basketballs? And I'm required to buy them for a class. Probably, yeah, okay? All right. Now, the other thing too is you have to do qualified education expenses spent on books, supplies, and equipment needed for the course of study. All right. Important line here. It does not matter whether expenses were paid in cash, by check, by credit or debit card, or with borrowed funds. So, I have $5,000 tuition. All right. I get a $2,500 scholarship, and the other $2,500 I took out in student loans. It's a loan that I don't have to pay back until I graduate. Can I use that $2,500 that I got from borrowed funds to qualify for me for the credit? Yes. Okay. Because basically, it's kind of a third party. The money was given to me, and I gave it to the school, even though it went right straight to school. So you can use borrowed. Okay. All right. A lot of times that's something that we have to prove with the letters from the IRS in New York State, because the 1098-T that we're going to talk about is never done right. Okay? For these places to be educational or institutions of higher education, they sure can't figure out how to fill out a 1098-T. They need to take a class because they're never done right. Always ask, if you're not sure about it, ask for the statement of student account. You go print out by semester, looks like a bank statement, tuition billed, all this stuff billed, and then it over here goes, here comes a scholarship, Pell Grant, TAP Grant from New York, Stafford loans, whatever it is from their student aid. You can see it right there in black and white, okay? Even to the point, if there's excess, check was written to the student. It says refund in big letters, okay? All right. Qualified tuition expense. We'll talk a little bit later about 529s, okay? Those QPTs and ESAs and Coverdales and stuff. You know, those as far as for the qualified education expenses. If it's tax-free, am I going to get to use it for the credit? That would be a double dip, okay? All right. What about money from grandma and grandpa? Grandma and grandpa are sending a check to the school to pay my tuition. Didn't borrow it, but that person is a dependent on my return. So my child is a dependent on my person's return. My mother decides, hey, as a gift for Christmas, I want to pay his last semester's tuition. Teresa's a little apprehensive. She's going to go, I read that somewhere.
It's a gift to the child, therefore the child is paying the tuition.
Exactly. Yep. So the child's paying it. So it's as if it was given to the child paid it. And if the child is dependent on my return, do I get to take the credit? Yes. Yep. Okay. All right. Great little flow chart there on page 630. So again, you know, reading those, I want you to have in the back of your mind that you're thinking about the fact that you're interviewing somebody. Those are great questions. All right. Okay. American Opportunity. Here we go again. Same things that we just talked about, education credits. Kind of goes through, gives a little bit more detail. American Opportunity, first 4 years. Non-refundable, refundable. $2,500 per a student on the return. Okay. And if we look at the page 635, okay, gives a little bit more. It's going to be on the form. All right. Must be at least a half-time student, and must be student must be pursuing a program leading to a degree or other recognized educational credits. And the other thing is it talks about a eligible education institution. All right. What about the cosmetology schools? Yes or no? Are they eligible educational institutions. If they're accredited and they give out a 1098T, a lot of them now, what do they have as part of their curriculum? Business classes. Teach you how to keep track of your books when you're doing it. Sounds like a degree earning program to me. Okay. All right. So we have that. Number of courses, again, doesn't say, at least half time. The last stipulation, and we asked Norm about this, at the end of the tax year, was the student been convicted of a felony for possessing or distributing a controlled substance? All right, I always tell everybody the example I had. Two young ladies coming in, one sitting on her phone, the other one answering the questions. The young lady never said a word. The girl's filling out her form. I asked her, have you ever been convicted for the possession or distribution of a controlled substance? She goes, no. Her friend who hasn't said a word the whole time playing on her phone goes, what about last year when you pulled over with so-and-so and you guys had drugs in the car? Whoops. She pulled up all her papers and walked out the door. So I bet her friend sat in the car at the next tax place where she tried to do the return. Okay? Or she's not her friend anymore. All right? But you have to ask these questions. Okay? All right. 1098T, again, this year, it is my understanding from what I've read that they're really cracking down on the universities. They can be penalized if they do not do the 1098Ts correctly. And we're going to see that in the examples that we do a little bit later here. Okay? So go to page 638. The infamous 1098T. Okay? Box 1, circled, says what? Payments received for qualified tuition and related expenses. Kind of like that, don't I? What's it tell me? What was paid? Okay? However, all of it usually is put in box 2. Amounts billed for qualified tuition related expenses. I don't know if it was paid or not. Okay, I don't know if they finished. I don't know. Just, talk about a box, and then that's where they love to put it. Because they show that they bill it, and then there's always something in 5. Okay? All right. Now, what's it say about 5? Shows the total of all scholarships or grants received by the institution on behalf of the student. These amounts underlined must be subtracted from the amount in box 1 because they reduce the amount of qualified expenses in box 1 for the credit. Okay? Back to the double dip. Now, what happens? My box 1 reads 3,000 and my box 5 reads 7,000. I have an extra $4,000. What do I have to do with it? Chances are income. Unless I can show that my books cost me $4,000 that I paid for at the bookstore, which is a distinct possibility these days. Okay? All right. My favorite right now for my son's school is I have to pay $200 and you can't get them used to have him mail him a little plastic card that he scratches off the back that gives him an access code to be able to do the homework online. Really? It looks like a Tim Hortons card that he should have gotten. He scratches off the back. Those are my favorite. And my other ones of favorite are, he has a couple of classes he's doing now. He sent me a picture. I paid $175 because it's new every year for 200 pages of paper printed with 3-hole punch shrunk wrap because the professor writes his own textbook. So obviously he's got a nice little royalty. But it's not even bound like this. It's just paper with 3 holes punched in it in shrink wrap. And it's not even really nice shrink wrap. It looks like saran wrap that they taped on the outside. Okay? So, books, yes, they can. But, you can add that to that because it's probably not in that qualified tuition and related expenses. But the moral is, if it's over and above, okay? Box 7, if you read that there, what's it talk about? This one shows for period beginning January and March 2017. What's that mean? Spring semester was rolled into the previous tax year. A lot of times that tuition and those awards for their loans or whatever for the spring are credited before the end of the calendar year. 8, checks it if it's at least a half-time student. And 9, check it if it's a graduate student. Okay? All right. A little problem there, or kind of I guess an example, I would say, about on 639, the 1098T. This would be perfect. Every school did it just this way. He paid $5,600, had no scholarships. Great, perfect. That's what we put in there for the credit. Okay? All right. 8863, we have the American Opportunity and Lifetime Learning Credits. Now, this page 1 of the form, when you're doing the exercises, I want you to understand the calculation because it does show some of the phase out in there, okay? Because if you go down the bottom for the excuse me, for the refundable or non-refundable, it does show that 131,000 for the phase out, okay? And it shows in line 2, if 180,000. Okay, so see that number? That is if your income's above 180,000, you're not getting the American Opportunity Credit, even if you think you deserved it. All right. Most of the time, what you're going to do, and we'll see in the problems here, is you're going to be doing part 3, qualifying child. In the software, it has you put in there the name and the social security number. Even though they may already have been put in, it doesn't auto-populate. What I mean by that, you have to put it in. Why? If I put somebody's name and a social security number that I didn't put in the main info, can I take the American Opportunity Credit? No, because they're not on my return. We have the school. We have a couple questions that says about the 1098T, did they receive it? And what boxes? We have the EIN number, all on the 1098T. Then we have our 4 due diligence questions. First 4 years is yes or no. Half-time student. Okay. I have my child enrolled at a private school. I pay tuition there. Do I qualify for the American Opportunity? No, not if it's high school. It's post-secondary, okay? We have first 4 years, and then we have the possession of the distribution of substance. Any of those might shoot us down to lifetime learning credit, okay? On 643, then you can see where it splits up. 1,500 non-refundable, 1,000 refundable, okay? That's American Opportunity. 644. We have lifetime learning credit. Did anybody have deja vu as they were reading through this going, didn't I just read that? Okay. A lot of the same things apply. Qualified education, all the expenses, who paid it, everything on there is very much the same, but it can apply to what? Graduate school. All right. Doesn't have to be undergraduate. So I have husband and wife, they graduated, got married, their jobs, now they're going back to get their MBAs. Both of them, paying out of pocket. Can they claim the lifetime learning? Both of them?
No.
No, it's what?
1 per return.
1 per return on the claim on that. Okay, all right. Same situation, all right, but their employers are paying their tuition as part of their compensation. Can they take the lifetime learning credit? Bob's thinking real hard on that one.
They didn't pay it.
Chances are no, because they didn't pay it. They were reimbursed for it. Kind of like what? Scholarship. Yep. Right. All right. And I guess if you're in grad school and you're taking chemistry, doesn't matter what you're making in the lab and distributing, you don't have to worry about the whole felony drug thing either. Okay. So you can still get the credit even if you've been arrested. All right. What was the guy this morning we were talking about it, the doctor from UB that is in all the trouble right now? Did you guys hear that in the news? He was a professor at UB for a while, and start a pharmaceutical company. And he's basically, they got him on racketeering for the distribution of fentanyl. How long before they're charging him with murder?
But they were legal channels he was going through. He was just going around convincing doctors, giving them reason to buy his fentanyl. I wouldn't be surprised if that gets.
Really? Still,
Pretty great.
it's a scary proposition with when it's out. All right. So the 1098T shows back up again. All the boxes, deja vu. Okay. But like I said, we're just kind of distinguishing the difference between our lifetime learning and our American Opportunity. Some forms, like I said, I'll send you the answers on those. Page 659, there's that whole scholarship thing, reporting taxable scholarship income. Where does it go at? Ends up on line 7 as income and wages, doesn't it? The taxable. Okay. All right. And that is chapter 6 in a nutshell. So it's not bad. There's a lot more pages there than you realize. It's just redundancy. When you boil it down to the simple parts, okay? In this one, we got into things, we talked about the effective. Big thing out of here you have to understand is the way those education credits work separately, especially the way the tuitions and stuff fall. Okay? All right, good. Got time to do some problems. All right. Okay. So what I want you to do, if you guys have your workbooks, we'll have time to go through one through each. So the first one I want you to do is problem 5-2. Okay, 5-2. George and Jean Van Eaton. All right. And they have a daughter, Amy. Make sure you read all of their bullet points, especially the last one, because Amy was a good girl. You should be proud of her. She was not convicted for felony possession of a controlled substance. All right, so go ahead and put that one in there. Remember, if you're going to save it to your thumb drive, make sure that you change something up and no peeking from this morning. Kim, don't go on there and look and see who did the one this morning. Did you put a different social security number in there? Okay, so we're working on all right, so we're looking at George and Jean Van Eaton. They are a couple that has, okay, they are a couple that has their daughter Amy, living on Washington, married, filing joint. It says that they would like to do in the workbook. However, we have their daughter who's 19, so no child tax credit. Like I said, get in the habit of the earned income credit. They're going to e-file. They'd like to do direct deposit. So complete the forms. Talks about that they were neither George nor Jean was a full-time student. No distributions from any retirement. And they were not disallowed the EIC. And they had health insurance all year long. Okay. All right. What's that? Yeah, they got put in there twice. Just change it by one so you can change the name of it, because I know they both appear as the same EIN number. Okay. All right, what's that, Kim?
The number 4, social security tax is for the number still running.
Okay,
Here's
We're-
2017. Here's 18.
okay, we're gonna talk about that in just a second, okay? Because look down at box 12. Look at the W-2 box 12, what's in there? D, what is D? Remember from our codes from the W-2? Contributions to retirement, okay? So go down and put that box 12 on your W-2 for me, Kim. And see what happens. So put a D in there just like it appears, the code, and then put the amount in, which is how much? Okay. Now, what did it do to your W-2 up above where you were asking? Yeah, because the Social Security is the total income and it was lowered by our contribution, so the taxable is less. So when we put that box D, that's where you got to make sure on that, on the box D. But good catch that you made sure that it didn't match. Okay. What's that?
Would that be after the add 2000? I still 2000.
I can't understand you. What'd you say?
Why the after add 2000?
Bec-
Just expand that.
The Social Security income? That's their gross income. You get credit for Social Security for the higher income, your gross income. You get to lower your taxable income by the amount you put in a retirement account. So that's why box 3 is higher than box 1. Okay? All right. Now, first thing that's in the bullet points says that last year they filed a 1040. What does that mean? They itemized. So when I go to 1040 page 1, I got my little box in the middle. My question is, did you itemize deductions last year? Yes. Okay, so if I answer yes, what happens? Yeah, so it's looking for a number. What is that number? What's our bullet point say? So do I have to claim that?
Yes.
Yes, because it's last year. Kind of a trick. Did they itemize this year? No. But they itemized last year, so we got to put 216 in there, okay? What's that, Kim? 1040, page 1, in the middle, the box that always lights up for every one of them. You see it? Yep, say yes. What else lights up? Box 10. So what do we have to put in there? Okay. All right. So we have that. Next thing we're going to put in is the W-2s. All right. The first W-2 we have is for George. He works at Sub Delivery Company. His wages were, in box 1 shows $3,545.33. That is his taxable wages. He had $1,152 withholding. All right. However, I can see that there's a difference. So if I go down, box D, or excuse me, in box 12, I put the D in. I put in the $2,000. What did that do to my Social Security wages? Raised them up. So I get a better credit towards my Social Security, my gross wages, okay? Medicare, same thing. But my taxable is lowered by that money I put into the retirement. And then we can see there, box 13, check the box for the retirement plan. And what did we have for state withholding? Norb, what do we have for state? Yep. And remember, I said, you know, and we talked about this last class, out of sight, out of mind, kind of down there on the bottom of 2, below the screen on the tax-wise. Just remember to go look, okay?
So I'm sorry, did you say, so when you put the code in D with the 2000, does that automatically fix those boxes?
Yep, you don't have to do the whole thing. The other
I
day,
was doing it in order and I checked marked the box to take the calculation.
You can,
Manually.
but for the one that is box 12 for a D code, it automatic calculates. If it's that 414H that we talked about for the state employee retirement, we have to do it and take the box off. Okay? Yep, the first time, a couple times I did, I was the same way. Once I learned that you could take it off, I'm like, oh boy, I got to take it off. Did a lot more work, isn't it? Okay? If you just throw that D in there, but you have to know too, if you have in 414H, that it's not going to do it for you and you need to go back up and do the calculation or take the calculation off. Okay? So we got the sub-delivery. We're going to do the other W-2 next. Steak on the grill. Okay? Boy, that sounds good right now, doesn't it? Anybody else? And by the way, I had Mexican the other night after Yum Yum Taco. I must have said it so many times I was just hungry for a taco on the way home. So told my wife, we're going out for Mexican. Same thing, we have 15,215 for the income for Jean. She had $521.22. Bob, does that look low? Yep, remember how you kind of pointed that out on that other one, the W-2. It's kind of low. But what do we have in box 12? We got a D because we have $1,000. Same thing kind of happens on this one, Kim, that happened on the other one. As soon as I put that $1,000 in there, then my W-2 matches up because it raised up my Social Security. And then out of sight, out of mind, we check our box 13 retirement plan, $752.22. So we got our 2 W-2s in there. Everybody good? Bob, you in good shape? What's that? 8863, the education one? Okay, good. W-2. Go up to the top. See the little tabs? You can look right here. Hit copy. Created a whole nother one, and just make sure you check the spouse box. Much easier as far as step. I mean, I pointed out there, but didn't I? That when you have a bunch of W-2s, if you're on one, right at the top, you copy W-2 and another one pops up. You don't have to go through add a form and go left on a tree and go back to the 1040 and hit F9.
I did the first one.
Yep. I think it was Angela that got mad at me that I hadn't told her that. She says, I kept going back to the 1040 line 7 and hitting F9. Okay. Look right up there on the top on the tab, right up here. It says copy W-2.
Oh, okay.
Hit that, it'll create another W-2 for you. Okay? So let me know when everybody's got their two W-2s in. Yeah, put the different company in. Yeah, the EIN numbers got copied. Okay. All right. Okay. Everybody good with the W-2s yet? Bob's already got it done. You want to trade classes, Bob, and I'll sit there and you can do the. Okay. All right. Know everybody doing? You got the other W-2 in there?
Yeah.
Kind of. Also, now you're just kind of going boom, 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 boom.
So I did all the worksheet problems.
So.
Part of the homework, because I assumed that's what, you know.
Yep.
we're here
That's right.
today.
That's right. Okay. All right. So we got a couple things to address. First thing is we're going to address our tuition statement. Okay. Now you got the 2 W-2s in. Anybody take a look at the box in the top left corner? Prior to that, they owe money. We haven't put in our American Opportunity Credit that we're probably going to qualify for Amy. So what did they do? That's where I was seeing if Bob was paying attention again, because he pointed out on the W-2 for the one I handed out. What do we notice about the wife's W-2? They're both, their withholdings pretty low, isn't it? Remember I said to use that 10% rule to kind of give you a baseline? Well, you can see that they didn't either one do 10%, so they owe money. But what do they also know? What's going to happen? They're going to get a refund because they have this refundable credit. Okay? It's going to be very interesting this year This is the first year we will have the Excelsior Scholarship. Okay. Everybody know what the Excelsior Scholarship is? Yeah, New York free tuition. They don't use the word free in it, nor tuition. They call it an Excelsior Scholarship. Okay. So the Excelsior Scholarship will pay for qualified educational expenses. What's going to happen to everybody's credit for the American Opportunity? Yeah, they're not going to get it. Okay. They're going to come in and say, well, I still paid out of pocket, but it's not, the Excelsior Scholarship doesn't cover what? Room and board. Even if they take out student loans out of pocket, doesn't cover room and board. So, can we claim the room and board for our American Opportunity? No. So a lot of people may be in this situation. I want to kind of point this out. You know, the way the Excelsior is working, I mean, we may have a few people that may be a little shocked when they go to do the return because they're used to that $2,500 credit for their kids in college. So, all right. So we're going to go to what form, Bob? What's that education one? 63. So we're going to go to 1040, page 2. So use your tree on the left. Go to your 1040, page 2. It's probably red right now. Okay.
How to get 1098?
Kim, just we're going through that right now. Okay. 8863 is what? On the line 50 for the education credit. Okay. So we're going to go to our box, hit F9. What's our choice there? 8863, page 2. Remember I said to you from the textbook, we're not going to do a lot of things on page 1. Page 2 is where we enter all the information for this form. Comes up, what do you have? Shows part 3. And what do we have to enter? Student's name. So we're going to enter Amy. And her last name is Van Eaton. All right. Everybody see where we're at? Okay. 1040, page 2. Did you go there?
Yeah.
Line 50. Did you go there? Yep. Education credits. Going to form. Remember the 8863 from what you read in the book? That's correct. Okay, so we're on the 8863, and we're entering the information. So we're not going to find a Form 1098T, Kim. This is what I was kind of trying to get to. You were asking me, where's the 1098T form? It's not a form that we're going to put in information. We're going to take information off of it and put it onto the Form 8863. Okay?
So use the number from the 1098, just put it on the form.
Exactly. Some things that we have, not everything's going to be like the W-2 where we have a form right on there. So, okay. Yeah, this is the case. We have to know the form that we're explaining. Okay. So we got the 8863. Put the name in there. Again, we have to put the Social Security number to show that it is somebody that is claimed on the return. We're going to put on here that she went to Buffalo State University. Okay. The address of the school is 1 Main Street. Again, just use your zip code. And realize it says any state. Okay. Question number 2. Did the student receive a 1098T? Yes. Okay. Box number 3. Did the student receive from Form 1098 for the last year with box 2 and box 7? Yeah, we'd kind of have to know. We're going to say yes. Okay. Reason I say that, she's 19. She's probably in her 2nd year. And the one last year might have showed that her tuition for the spring was rolled into the previous year. Okay. School's EIN number. Okay, so we have everything in there. If it's somebody that went spring semester one spot, fall semester a different spot, see how we got 2 things on there? We could enter 2 schools. We don't need to do that in this case. So we're to our due diligence questions. Has the Hope Scholarship credit or American Opportunity credit been claimed? No. Okay, we're gonna say no, all right. Was she enrolled at least half-time? What's our 1098T say there in box 8? Yes, okay. Has she been in her first 4 years of post-secondary? Chances are no, because she's 19 years old, okay? All right. What year did you graduate, Norb? So she didn't go to school with Norb in 1972, okay? All right. Was the student convicted? Well, that was one of our bullet points, and that was no. So, how many red boxes now do you have at the bottom? 2 of them. So, she met the criteria. Where can we put it? Because we can only choose one. Which one's going to be more beneficial to the family? For the tuition. American Opportunity, okay? Anytime you have anything that contains refundable, chances are it's more beneficial. Now, I'm looking at box 7. It says adjusted qualified education expenses. I can't enter more than 4,000. Okay? So 4,000 is the max. So even if I was, say I could have $8,000 in qualified tuition, I only get credit for 4 on the federal. Okay? Looking at the 1098T, what do I put in there? Why do I put 2216 in there? Yeah, I have to back out the scholarship. Remember what we said in the little description in the reading? So I take my 8214, subtract my $6,000 scholarship, and I have what, 2214? Okay. What did that just do to their refund? Big swing, wasn't it? Okay, big credit. What else is probably red on your tree on the left that you now have to do? That 8867 that we talked about, the earned income credit? Due diligence. Anytime you're looking at refundable credits, due diligence. All right? So let's go through that due diligence form. We'll talk about a little bit here with this one. It's asking me, did you complete the return based on the information? Yes.
I don't have the form on the tree.
On the left? Okay.
The forms that I don't need. So I have to put it.
Go to your 8863, page 2. Go down to the bottom. You can only put it in one spot. Take it out of that because you're taking out American Opportunity. That's why I asked you could only have 2 red boxes. You only take it in one spot. Now hit enter. So that you now what do you have on the left? Okay? Because you are basically double dipping. Okay?
I like it.
What?
I like it.
Every year for class, I do give a double dipper of the year award. You get a little gold-plated ice cream scoop. Okay? All right? That you can put on your desk at the office and say, you want to see me because I double dip credits. Okay? All right. So, yeah, that would be the whole due diligence part and the ethics. Okay? So we have our questions. It talks about satisfying knowledge. Did you interview the taxpayer and ask adequate questions and get documents? All right. Did you review all those things to determine that they're eligible for this credit? Did any information provided by the taxpayer, a third party, or reasonably known to you in connection with preparing the return appear to be incorrect? No. If you answer yes to that one, okay, then chances are you're not going to be doing the return because that's probably fraud. Did you satisfy the record retention requirement to meet the yes? For the education credit, we don't have to worry about that because what did you get? 1098T or statement of student account, okay? Did the taxpayer, whether he or she, did you ask the taxpayer whether he or she could provide documentation to substantiate eligibility? Again, asking for that statement of student account. Did you ask the taxpayer if any of these credits were disallowed or reduced from the previous year? I did. Okay. On to page 2 of the 8867. There's a question right in the middle, line 11. Did the taxpayer provide substantiation such as Form 1098T? Boy, this is, okay, echo. Okay, same question. And receipts for the qualified tuition related expenses for the claim on the AOTC. Do I have a 1098T? They're claiming books. Do I have receipts from the bookstore? Anything else? Paintbrushes, whatever else? Okay. Again, that's why I say that statement of student account tells the whole story for you. So if they bring that in and they're receipts from a bookstore, you're good. Okay, so we're going to say yes. All right. And again, did you certify that all the answers on this form 8867 are to the best of your knowledge true, correct, and complete? You think that they're really checking up on this? Isn't that the third time we've asked them if this is accurate and complete? Okay. Now, what else is left over on the left tree that people are wondering about? 8880. Anybody know what that is? Ever heard of the Savers Credit? Esther always calls it the Savers Credit. If you click on that form and bring it up, it says credit for qualified retirement savings contributions. How do we know that they did that? What's that? Yeah, because what was checked on their W-2, Norm? Yeah, the retirement box and the Ds. So they qualify for it. Now, in the bullet points, the one bullet point read, neither George nor Jean was a full-time student in 2016, nor did they receive any distribution from any retirement plans in the past 3 years. What's my first two questions on this one that I need to answer? Yep, were George or Jean a full-time student? No. Okay. And then what else is down there that is red? It's asking, were there distributions from retirement accounts in 14, 15, or 16? See where that bullet point's in there? Last 3 years? Any IRAs? No. Okay, so we can go into those boxes and hit F3. And F3 is the Visine button. Gets the red out. Okay? Did you go into it and hit F3? Go click in the box. Click on that box and hit F3. There you go. Perfect. Okay. Yep. So go right in the box there. Good job. Yep. Yep. Hit F3. And so what's that credit down at the bottom they're getting? Yeah, this is what a lot of taxpayers forget. $300? That's a textbook or two. Okay. All right. Maybe one. They're in medical school. It's one. Okay. All right. So what's our numbers? What's anybody got? Refund. 1770. What's the federal refund? 1771. Okay. All right. Okay, go back to page 1. Or excuse me, main info, I'm sorry. All right, and go down to your premium. We don't have to check this one unless they have dependent care. The EIC one, that's the one I want you to always check. The EIC. Okay. Okay. Okay, so let's go through the 1040. Okay. So everybody go to 1040, page 1. We'll kind of go through the lines because that's kind of where everything, the rubber has met the road. So on the 1040, page 1, we have line 7, $45,760. Everybody good there? Okay. We have on line 10, because we have to claim it, $216. No, you got to actually put it in. Okay, so can you put 216 right on line 10? Yeah, don't worry about the worksheet that's in there. Don't use it because you don't have last year. Okay, for the practice problems, do not use it. When you're doing somebody's return, you can use it, but for our practice purposes, we don't have any history. Nothing's carried forward, okay? I don't, even if it's a new client, I don't have a previous year's return, so I have nothing to fill in there. So did you get the 216 in there?
It's yellow.
Okay. Go into the box and hit F8. Now try to put it in. Got it? What's your number up in the top left now? Okay, all right. Nord, where are we at? Did you get that one in there? Do you have the state refund in there? Back to 1040 page. Yep, you're good there. Oh, let's go to your 8863. Go down to where the tuition is. Okay. What school are you going to, Lord? $40,002,214. I realize higher education's gone up, but well, what number do we put in? Remember? Yep, exactly. Okay. How's your number look in the top left box now? Put the blue number up in the blue box there. Yep. So, all right.
I didn't give it the.
Okay. Take a look.
The 1098.
Must be a Harvard grad, huh?
I didn't finish
Everyone
that.
take-
I can't find it. 1098, I didn't finish it.
Okay, right there. So you got their W-2s in? Now go to, yep, there. Put it on there. Click on that. So you got that. Yep.
Yeah, so this one, I don't know.
Yeah, just put yes.
Oh, what is it? Let's see.
Because she's 19 years old and she was probably in school last year, so she got a 1098. Okay, now you got to put in the EIN number up there. Okay. Okay. Now you got to answer the questions.
What is it?
What's that? You're done. Okay? Answer the questions. That's not on the 1098T. We just get numbers off of there. All right? So what's the answer to that question? Yeah, so she did. So if she chances it's no, because she did not claim that she hasn't been in college for 4 years. All right. Next one says, was the student at least a half-time student? That box is checked down here on our 1098T. All right. Did the student complete the first 4 years? She's not old enough, not unless she graduated from high school when she was 15. So, okay. And then remember the bullet points that say that she convicted of a, okay. All right. Okay. Now, what do we put in those boxes? Hit enter. So we got 2 red boxes, don't we? Which one are we going to take? Which one's better? Credit, right? The American Opportunity Credit. Yeah. And how much can we put in there? Yeah, the difference, right?
Yeah, difference.
Yep. Yep. Okay. What's the blue box up in the top left corner say now? Yeah. Okay. You got a few things you got to clean up on the rest of them. All right. Okay. I want to do one more, so I'm going to go ahead and do the other problem here. Okay. Okay. Because it's we're almost out of time because we've been trying to compress stuff in there. All right. So that's that one. The other one we're going to take a look at is, let's see here. Okay, the other one I want to look at because I want to show you something. All right, we're going to do the next problem there is Sarah Day. Okay, so we're going to kind of do this one and go together because I want to show you something on here because, like I said, we're almost out of time. All right. Okay, so we're going to do Sarah Day. It talks about Sarah filed a 1040A. So we're on page 66 in the book. She just moved on January 2016. She lived in her previous apartment for 3 years. Her W-2 has the old address on it. Can she still use it? Yeah. Okay. All right. So we're going to start her return. She is 150223333. All right. Oops. 150223333. Okay. So we have that one. All right. We have Sarah. Last name is Day. She's living at 43 EITTERN Street in the town of Amherst. She has an email of day@gmail.com. Hope nobody's trying to email these people that are on these, okay? 716-662-9903 for a main daytime phone number. And she has a cell of 716-777-7878. She was born May 12th, 1981. Her occupation is a maid. Filing status, what do we think? Sarah, and then she's got her daughter Melinda, who was born in 2002. What's that sound like? Head of the household, okay? So we're gonna put Melinda on there. Her date of birth was 8/12/2002. Her social security number. We have her as a daughter. Okay, she's 14. Do chances are, does she qualify for any dependent care? No. Remember in there it said about 13 or under? Okay. Unless there's something that's a special needs situation. Okay. We're e-filing this guy. All right. She's going to use an M&T bank account, 02246. It is a... Okay. We have filing today. Okay. All right. Okay, so we have all of our information. So let's go back to our bullet points. W-2. Okay. Talks about the W-2. So where's her W-2 at? She has a W-2 that says 81 Spruce on it. But on there it says 43 Bitterton. Bitterton? Okay, so we're going to do the W-2 for her as a taxpayer. What do I check in these two boxes? Says, is it the one on the W-2? Or does this says make changes? Make changes, because I want to make sure my information matches the documents that she gave me. So I'm going to change this to 81 Spruce Street in the area, okay? I have an EIN number of 1698761112. She's working at Mary Maid's. That is at 1 Mary Street. That sounds like a happy place. Okay, 14228. She has wages of $13,569.44. And she has $567.08 in withholding. Okay. No retirements or anything in box 12 or 14. And she has her state withholding of $425. Okay. What else does she have on there? Let's see what the bullet points say. We have, she would like to handle any refund or amount owed electronically. We did that. 2016 return, we're working on that. New York renters credit. All right, Teresa, you get that one?
Yes.
Okay. We're going to go through that in a second, all right? There was no earned income credit disallowed. And since for health insurance purposes, says that she was covered and that her daughter was covered by what? Yep, so we can put on there that they both had coverage all 12 months, okay? All right. We have an interest statement, a 1099 INT, so where does that go? Mark, what form do we use for our interest? Line 8, we're going to bring up a Schedule B. But does it go on the B? No. It is on the B, but it does not go on the B. All right. We're going to do our little worksheet. And we have First National Bank. Okay. And we have what? We have interest income of $100.25. What kind of interest income is it from there on page 68? Comes in what box? It's in box 3, so it's bonds. So what do we do about the state? Yep. So under the state adjustment, first thing we're going to put the negative 125 because it's not taxable on the state. Don't see anything else in the box. All right. So we have that. All right. Now, this is the one I want everybody to pay attention to here, and then I'll let you work on the rest and I'll help you out as we wrap up, okay? New York State renters credit. You know, I'll let you go through the due diligence on the EIC, like the book, and answer the questions. First few, read the questions. Make sure you understand what they say on the EIC worksheet and the 8867. I want you to go to the New York 201, page 4. So on your tree on the left, New York 201, page 4. All right. So is everybody there? Should have lines, should start with line 62. Okay. Kim, you there? New York, on your tree on the left, New York 201, page 4. All right. So we're there. All right. I want you to look at line 67. It says real property tax credit. Okay. So what that is the real property tax that somebody pays. It's the credit there. All right. So we're going to go look at that form. So you click on that little thing. It lights up. Hit F9. Should have a New York 214. Okay. We got a funny little form that has 3 pages. All right. Now, first question is already answered because you're doing a full year state. What's question 2 say? Did you occupy the same residence for at least 6 months during the year? Okay. Must be yes, because when did she move?
January.
So she was in there the last 6 months, okay? All right, trick question, huh? So we're gonna say yes, all right? Did you own any real property with current market value of $85,000 or more? Well, if she's renting, chances are she doesn't own anything, okay? So we're gonna say no. Next one that's lit up for the red is, did you reside in public housing or residence completely exempt from real estate taxes? No. And are you living in a nursing home? No. We're going to see down at the bottom, we have our household members. So now we're going to click on the tree on the left. We're going to go to page 2. All right. Page 2, part 4. Compute real property tax. What this credit is, and what we're going to put in here is when somebody rents from a landlord, the landlord pays property tax on the place. All right? The fact that your rent is helping him pay that property tax, just like you get a deduction for your residence and your property tax, you're helping him pay, you get a credit since you're helping him pay. Pretty tight little credit, but it's a credit, okay? First line says for renters only. That's why we're coming to this. It says she is a renter. Enter the total amount of rent you and all members of your household paid. Well, she paid $400 a month, and she lived there all year, so what was the total? $4,800, okay? Now, next line in the little bullet point says she did not own any real property, nor did she reside in public housing, but it also says that rent and the utilities were not included. So I look at all my boxes there. What one am I going to check? Yeah, because all the rent. So none of the above. And then it asks me, how many months did I pay that rent? 12. Okay. All right. So we have a little thing in there. What's it say on line 21? Average monthly adjusted rent, if more than $450 stop, you do not qualify. What's it adjusting it by? It's adjusting it by the fact that if that rent $400 covered also heat, gas, electricity, you can see the percentage. But in this case, we're not adjusting. It's 100%. Okay? So now I go to page 3 of my form. She gets a $49 credit. Okay? For Sarah and her daughter, Sarah making $13,569, $49 is a lot of money. Okay? That might be a week's worth of groceries. So it's a lot of money. It's something that you always want to be aware of. So if you see somebody with very low income that rents, you need to ask them, what amount do you pay in rent? And does that rent include utilities? If they tell you I pay $600, okay, well, then you're probably not going to qualify. But, you know, there's a lot of places in the city that, you know, that are quads or whatever, that are houses that have been divided up in almost rooms. People are paying $400 a month. And again, for somebody making $13,000, that's a lot of money, and that $49 is a lot of money. So make sure you get that credit. Okay? Now, a little farther down. All right. Okay. One thing I forgot to do, we didn't talk about the New York on the other one. Okay. So close this return. All right. What's that? Home return and go back to Van Eaton. I forgot to do something. Out of sight, out of mind. Down at the bottom. So take your bar on your left and go all the way to the bottom of the New York forms. So we're back in the Van Eaton return, okay? What's down there at the bottom? New York 214 or New York. Close the return and go into the Van Eaton return. So open the Van Eaton return. The one at college, what's down there? Yeah, what is that one? Yeah, college tuition. Okay, so everybody find it? So go all the way to the bottom on the tree on the left. Yep, there you are. So go back in the Van Eaton return. Did you do the Van Eaton return? The first one we did. You just put it under Eden. It's the first one there. Okay. Just open that up. Did okay. Just did okay. All right. So go down here. So go down the bottom. Here we go, 272, go that page. Right there. Okay, go, page 1. Okay, zoom in there. Yep, 272 page. Everybody there? Okay. So, getting some questions. We got Amy. Is she a dependent? Yes. Okay. All right. Were the expenses for undergraduate tuition? Yes. And what is the qualified tuition expense she had? What was that number we used on the other return? 22 what? 14. Okay. So she's got a nice little state credit of how much? Yep. So we're going to, well, actually the credit, go to New York 272, page 2. Okay. She has how much of a credit? $200. That's kind of the limitation. Now, we're going to do one thing here. See where it says box 8? This is a little trick where you can see, especially somebody that pays a lot, like Norb pays $40 million a year to go to school. Okay. But if you have someplace, somebody's going to Canisius, private school, a lot out of pocket, they may get to use it as an itemized. So if you look down there, 8, check the first box. Okay. If I check the first box, what happens? It shows me if I don't take the credit, this is my refund. And if I do take the credit, this is my refund. Which one's greater? Taking the credit. Like I said, sometimes when you check that box, if you take the $200 credit away and use it as an itemized deduction, it might make for a higher refund. Okay, does that make sense to everybody? Kind of remember what we talked about the credit versus deduction and which one is greater? This is an example of it. Because on this one, taking a deduction hurts us. Taking a credit helps us. Okay? All right, so that's the thing we can do, because if I check the other box, okay, I have what? I have my credit shows up by $11.95. Okay? All right? So that's one of those little tricks too, where you can say something, hold on one second, let me see if there's a little bit more here. Especially as somebody, like I said, that has a real high tuition bill. You go in there because, you know, they might have a Canisius. It's not uncommon for you to see qualified expenses. We can only put $4,000 on the federal. Okay? That's actually what Norb did. He tried to get both numbers in the same thing. So he got the 4,000 and the 22. But the 4,000, but on the state, I might have qualified of 12,000. Okay, because I have out of pocket because of the high price, especially if it's higher income, it may help them on the itemized. So I'm going to do a little thing here. If I go back, in this case, on the 272, and you guys don't have to do this, but I put down here that instead of $22.14, it was $22,140. Okay. Now I'm going to go to 2. All right. Which one's bigger? Still the second one, isn't it? Okay. So you can see you have to do a double check. Their income is such a level at $45,000, the credit's always going to be more beneficial to them. Remember I was talking about deduction versus credit, which one helps us the most? Is it the credit that's a dollar for dollar help as a refundable? Or is it the deduction that kind of just lowers as a percentage? You got to see which one affects us more. Okay? All right. Any questions on that one? Any questions on the other one about the renter's credit? Okay. Again, this has all been recorded. So I'm going to turn that off for right now.